Let's give you that business update this Friday morning, starting with this, where consumers can now expect interest rates to stay at their current low levels for now. Reserve Bank Governor, that's Lesetja Kganyago, says that the bank sees inflation remaining quite steady at the lower end of the bank's 3 to 6% target. Now, a low inflation outlook supports the case for interest rates to remain unchanged or to be lowered. And the bank cut interest rates by just less than 3% last year to cushion the impact of COVID-19. While speaking on ENCA Business last night, Kganyago said while electricity and food prices are currently rising, the risks to inflation are balanced. He says labour costs remain contained and house price inflation is lower.
That is putting a downward pressure on inflation. And our assessment had been that the balance of these risks is such that inflation will remain close to the midpoint. And if inflation remains close to the midpoint, we then have the room to continue with our accommodative monetary policy stance. However, should the risks materialize that pushes inflation higher, we would have to withdraw the accommodation that we have at the moment. What we have seen is that the lower interest rate environment had actually made a lot of people to move from rental to purchasing, because the cost of mortgages is now so much lower. And we see that at in the entry level of the housing market. And that means that people are actually building assets in this environment.